Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Welcome to Qualcomm Pulse, where we dive into the world of tech and uncover the most compelling investment opportunities. Today, we're taking a closer look at the stock that's been quietly bouncing back from its multi-year low, Qualcomm Inc. Shares of QCOM have gained 15% in just a few weeks, and despite this rebound, they still remain down 20% from their February high. But here's the thing, this is a rare combination of technical recovery and deep value appeal. The stock is starting to look like it could be due for another move upwards. So, what's behind Qualcomm's latest resurgence? Well, analyst Joshua Buchalter at TD Cowen recently issued his first new buy rating on the stock in months, with a $160 price target that implies a 15% upside from Tuesday's close. And according to Buchalter, there are several reasons why this could be the catalyst needed to reignite broader interest in the stock. First and foremost, Qualcomm has been delivering solid results quarter after quarter, but those results haven't always been reflected in the share price. That is, until now. The return of bullish analyst sentiment could be just what the doctor ordered to get investors excited about this stock again. But there's more to it than that. Qualcomm's leadership team made a compelling case for its diversification efforts during investor meetings held in Europe. They highlighted the company's ability to leverage its low-power, high-connectivity product portfolio to break into markets where demand is growing and margins can be healthy. This strategic pivot isn't new, but it's gaining traction. The company is putting its vast IP portfolio to work in adjacent sectors, particularly IoT and automotive, where real growth opportunities exist. And management emphasized this strategic pivot in their European meetings, which impressed analysts at TD Cowen. Now, I know what you're thinking. What about the concerns over Qualcomm's technology licensing business? Well, TD Cowen believes those issues are overstated, and that the licensing segment continues to provide a stable foundation of revenue. And with the company's fundamentals remaining strong, there's room for management to maneuver and invest in new areas. In fact, one of the more encouraging developments in recent sessions is the slowdown in volatility. After weeks of aggressive market-wide selling, Qualcomm has now posted several days of more stable trading. The panic selling appears to have eased, and buyers are starting to show up in greater volume, particularly around the $130-$135 range. That behavior suggests a base may be forming, and with the stock rebounding 15% from its lows, the risk-reward profile is starting to look much more attractive. If the broader market cooperates and Qualcomm delivers another strong earnings print later this month, a sustained rebound could easily follow. So, what does this mean for investors? Well, for those watching closely, the signs of a reversal are becoming harder to ignore. This could be a textbook recovery trade, and with volatility easing and earnings just around the corner, it's definitely worth keeping an eye on. Before we go, I want to let you in on a little secret. Qualcomm Pulse keeps track of Wall Street's top-rated and best-performing research analysts and the stocks they recommend to their clients on a daily basis. And our analysts have identified the 5 stocks that top analysts are quietly whispering to their clients to buy now before the broader market catches on. But we're not going to name drop just yet. Instead, we want you to check out Qualcomm Pulse All Access, where you'll gain access to our full suite of research tools and get the inside scoop on the most compelling investment opportunities in tech.